Hey guys, how are we all going? Just want to do a quick market update here on Bitcoin because we've got a bit of action coming in with the daily close, coming in in about 2 hours and 40 minutes. So at the moment, we really have this strong sort of either distribution or reaccumulation phase, which is starting to play more towards at the moment with a possible spring action being put in through here. So at the moment, what we're looking at here is, we had this big double top bearish divergence that I was talking about over the last couple of weeks, and the market, looked really weak, and the sellers were definitely in control every time. We tried to have a little bit of a rebound. It just sold off, and we could see, especially on the low time frames, like the 1 hours, the 4 hours, and anytime we started to get a bit of a rally, before the close of the candle, it would get knocked back down. So that was telling me that, the high time frames most likely to end up being bearish as well on their closes, and that continued to follow through. But, we had daily bearish setup, and we had a weekly pretty bearish setup as well, with the multiple swing failure patterns. We had this one through here, and then we also had this one, this nasty top one here, which pushed all the way to 69, right? So obviously that put a little bit of fear into the market, or a lot of fear into the market, I should say, with this big sell-off. And, OnChain Analytics is saying, it's weak hands selling into strong hands, right? We were taking hedging at the top here around the 63 to 65 area. And, I sold some up here as well. And then also Ethereum on this trend break, we got out there, which was really nice to get out before that nasty dump off. Because with these, at the end of the day, we don't really know what's going to happen, right? This could sell off really bad and then just roll over again like that. And then, it takes a while for it to reaccumulate and then go back up. You don't want to just be holding all the way through there if you don't have to, right? So we've reclaimed the range low now here a couple of hours ago in this latest 4 hour. So we came up here and the bears had their chance to reject us from the range low. It looked like a bearish retest after breaking below range low, which, then if you look at it like this, it just looks like a pretty standard distribution pattern with the UTAD out the top here. You come back below the previous breakout level, you come up, you get the rejection underneath the previous all-time high, and then you roll over from there. If you go back a couple of videos when I was looking for the 80K target for Bitcoin, I was saying if it does reject, this is what it's going to look like. You get the rejection, you come back up to the previous range high, and then you sell off. And we got that, and either you got out after we started to show weakness through here, or up through here anywhere, and it's an easy 14%. You could have collected the bottom. Now, the bottom ended up being an absolute perfect entry down here on the 4 hour. A really nice gimme setup. I actually missed this one, unfortunately, because I was asleep. Happened about 3 a.m. my time. When I went to sleep, I was looking at these candles here, and it looked pretty grim. So I wasn't going to just long and hope that it reversed. But this candle here closed quite nice in the end, and had that Morningstar reversal setup. So that's the sort of thing that I always want to be getting long on, and to take this type of setup when I see like a prolonged downtrend like this. It's getting quite obvious that we need something to reverse on. I would just get long on the close there, and stop loss would be below there. It's quite a tight entry, but it does give me a chance to, if there's invalidation and we break below this wick here, and it ends up coming back up, I can always get into it again. But if we break below here and we get a close below that level, obviously I don't want to be in the market anymore. So it's a really nice clean entry. So just letting you guys know for future setups, when you do see stuff like this happen, when you're quite oversold on the 4 hour RSI, and we do get nice sort of Morningstar reversal setups like that. It was very similar setup, that one there, to what got us the entry down here on Bitcoin on the daily. So 4 hour and dailies, when you get that sort of Morningstar reversal setup like that, with a push to the top, and then the close like that at the bottom, off a key level, or when you were quite oversold, I do like to take those. So now we're getting the different type of Morningstar reversal, which is the one that has the tail to the downside. on our daily, and we're coming back in to reclaim the range low now, and also this daily P block as well, which is really important to reclaim the bottom of that and not get rejected by it. So yeah, 2.5 hours until the close. We want to see a nice strong close above 50% of this down candle through here, right? So how we measure that is like this. And then, so we want to see the green candle here, the second green candle here, close above 58,600, and that will give us a Morningstar reversal confirmation. And it can always just roll over again from there. But what it does tell us is that the bulls are winning these closes. The higher time frame that they win it on, the stronger it tells us that the bulls are. Right, so bears had their time to sell off, and they could only push it down to 55.6, which is decent from 70k. Right, we were at 69, which is a decent 20% sell off. So now we're reclaiming the range low, and it's possible spring action getting put into play. Right, so what do we need to know next from here to help make us more decisions? Right, really interesting line through here, this trend line through here to be aware of. I think breaking above that will be telling us that there's a bit more bullish action in the market, and bulls have momentum and strength on their side. But the main thing I want to be looking for is getting above this P block, and the Wyckoff area that you're looking for is above this 6,000 or 61,000 really. I mean, it's 60,800 really, but it's the last rally in here, the last high before the sell-off, that you want to get back above to confirm that spring action, because you can have these spring actions and then end up just rolling over again and make this lower low through here, and that would sort of confirm that will confirm this distribution pattern through here, right? So the thing is, you don't really ever know is it distribution or is it reaccumulation until it completely plays out, right? It can always start to change halfway through due to the news cycle, or something changes. Somebody changes their mind from wanting to be a holder to a seller for various reasons, right? That has big stake in the market. But generally, you can tell by either the upthrust or the springs getting put into place, and looking and see where the most traders end up getting trapped, right? You can do volume analysis and all that sort of stuff as well, but I find the most basic way, without going through all the high detail things, what to look for in a range, the most basic thing to look for is, okay, we've had a UTAT up here, which is up thrust after distribution, right? We're getting rejected at range highs, and then you can expect that to end up rolling over. Or if you push above range high, right? So this is a range high. If you push above range high, get a bearish retest inside there, you expect it to go to the downside, or either the breakout to the bottom side of the range, right? We did that as well through here. It's exactly the same sort of concept. So it broke to range low, broke to range high, and then sold off, right? So usually when you break to one side of the range, you expect it to test the other side if you come back into the range, because realistically, when you break out, if it's bullish, it should push from there, right? If it's not, it's going to come back inside, and that starts to put a lot of fear in the bulls. People getting in down here, they want to be taking profit there. So, and then also the sellers get the opportunity then to take control of the market. So now we're doing the opposite thing. We're sweeping the range low and we're reclaiming through here. So what's happening is the sellers are going to be in a bad position and be offside, especially the ones that sold, they went short below here, below the range low, trying to catch the breakout. They're all trapped. Anybody that panic sold below the range low now we're back above range low, and this really key weekly resistance, they have to get back into their position. So, it's going to be people getting either liquidated or stopped out that sold in bad positions, or closing their trades if, they were selling up through here, they're in a nice position. And then also people who panic sold down here have to get back into their positions, right? Because they're going to start to see this rally and they have to FOMO back in. So you have all these market forces pushing against each other, depending on the psychology of the traders and where they entered their position. So one of the key levels we want to look for is this last swing high before the roll off, because you're going to have a lot of people that are setting up their short trades, just say you got in anywhere in this range here, and their stop loss is going to be above there, right? And so if they didn't take profit down through here when they were up 7%, they're starting to see their profits slowly disappear, and then they have to start closing. The market makers, or whoever's in control, sometimes we call CEO, right? Covert operator. What do you want to, whatever you want to call him. Many names, but yeah, we see the breakout and push up here. That's what they're going to be targeting, because they want to see the people who are shorting through here. They want to see them get liquidated if they're too high leverage and they've got, you know, close liquidation to the first level of resistance, or get stopped out above there, because that gives a nice push up to range high, right? And so they capture that explosive move in the trade. So that's just a little bit of like the inside of the battles going on between, you know, the big players in different positions and the way they're trying to manipulate the younger players in the market to take the trade against them. So generally what happens is, if this is a reaccumulation phase, you would have had a lot of people that would have bought really hard above here, and they got caught and trapped above range high. And so they have to panic sell through here. And then when they're panic selling through here, the CEO is buying up, and they're buying up into that big selling dumping pressure through here, and they absorb the selling pressure, push the market back up in the direction they want to go. And then, you know, they take out the stops. You get sort of, you know, sideways action, backup action through here. And then we push from there, right? So that's what we want to be seeing, some sort of flag through here. Now, the danger that we want to watch out for is this 64 to 66 area, which is another sort of P block through here as well. And I'll give a bit more explanation of that in a second when we look at previous ranges on another slide. But what we don't want to see happen is come up and reject at this previous all-time high around 65, or a little bit higher around 66, right? And then roll over from here, because that would give us, you know, that big head and shoulders looking pattern, and you would sort of look a lot like a distribution. Now, we've had similar patterns previously, recently, earlier this year, and then one last year as well before the big rally. So fairly sort of similar setup here, as you can see. So we had our range high up here, right? We had a UTAD, which trapped all the people who were too bullish, then sold off quite aggressively, caught a whole heap of panic sellers below the range low. And then we reclaimed the range low with this really nice big daily candle here. Then we pushed all the way back to this daily P block, got rejected from there, came back down, had the bearish retest, and then sold off quite aggressively. Obviously, this one had a lot of different news, fear spikes in there as well, which also helped it to play out. But we have very similar sort of price action happening here now as well. We have the daily P block at the top of the left shoulder. We had the UTAD out the top here that sucked in the buyers and trapped them. The bearish retest and the sell-off through here to, you know, deviate below the range low, trap all the sellers that are too bearish below range low, the late shorters. Now it looks like we're going to come back up. So we need to see, you know, how high we come back up. You know, only making it to 62 before a sell-off is going to be pretty bearish. We want to at least see it come up and test 65 to give us any real hope here that this is just going to come up and then roll over, and we get, you know, this bearish sort of price action, and, you know, then break below here. That would be telling us that it's probably going to be another distribution range like what we got back here. And then also very similar price action in the one back here as well. But obviously this one sort of played out on the lower time frames. It looks a lot more similar, but on the daily time frame, it's you can still see the same shape here, right? We zoom in on the 4 hour. I won't, because it's a bit of a waste of time, but it looks very similar to these distribution ranges through here. So have to be careful and watch out for that, and just be aware, you know, of these key levels through here. So the top of the P block through here is 64. The top of the daily close at the start of the range, which was where you take range high from, is about 66, 200. So watching for nasty rejections in between that sort of area there, because it could be a really good spot to hedge, sell some spot maybe, or just, you know, you take a little bit of risk off the table before, you know, there's a possible dump. You know, if we end up getting a really nice ascending triangle or bull flag or something like that, and then push out, you know, you can always get back in or take those hedges off. You know, the hedging worked pretty well up here and through here so far. You know, sometimes you win them, sometimes you lose them. But generally, I just like to prefer to be in a better position in case there is a big sell-off, because psychologically, just put yourself in such a better position in the market to think clearly. You're not panicking. You've taken a little bit of risk off. You're in a nice position. And then it also gives you that mental clarity to get back into the market. And it does help buy the bottom, I feel, because you're in just that better mental state rather than being panicking and frantic. And, oh my God, I just sold here, just hedged here, sold here. And you're panic selling because, all of a sudden your bag in 1 week is down 20%. And if, you have a 6 or 7 figure account, that can be hundreds of thousands of dollars that your account is now down in 7 to 8 days, right? It's not a really good feeling, which clouds your judgment and makes it a lot harder to actually catch the bottom when it's there because, what happens if it rolls over again? All these negative thoughts start popping into your head. But when you do get bearish signals on the high time frames, I do think it's a really good practice just to hedge, just say you got 10 Bitcoin, in your account, maybe just hedge 2 or 3, just to give yourself that little bit of psychological edge. Just what I like to do anyway, not financial advice, but for me, that's been playing out pretty well lately. But I always wait for the high time frame rejections or bearish setups. So just to go over the warning signs that we had here, obviously, on our Nexus indicator, we had the bearish divergence on the daily. We had the bearish divergence on our RSI as well, which is really clear. We had the SFPs. We had them on a weekly as well, right? Really nasty SFPs from here and also from here as well. So it's just double rejection through there is always not a good sign for me. And so those were sort of the things that told me it was probably a good idea to just take a little bit of risk off here in case we do sell off. And then on the Ethereum trade, it just looked really nasty because it looked like we'd had a bit of a change of behavior because it was, go up, chop sideways, up, chop sideways, up, chop sideways. And then if you looked on the daily, we just weren't getting that next, it was look really, really red. And then we got this candle here, which is just, a trigger for me to be like, okay, we just had out of the last, 7 candles we've had, or 6 candles, sorry, 1, 2, 3, 4, 5, 6, 7, 7 candles. Can't count. We had 1 green candle, right, since the top. And it just looked a little bit nasty. And then we got the close with the, rejection pin top wick here. And I was just like, this is probably going to dump because it's resting on the trend line. That if it was going to rally, it was probably going to rally at that point there. We're about to lose that P block of support, which is held up 1, 2, 3 times. It's probably not going to last another time. And then, to add to that was the weekly as well, which was really nasty with this shooting star reversal. So you sort of like add all the time frames together. If you have bearish setups on the higher time frames, that usually rolls over into the lower time frames and you have nasty sell-off. So what we want to see here on Ethereum is a push up. And I mean, it would be perfect if this closed green because that would just be, a really nice pullback to the previous weekly highs, just a bullish retest before we push on. I don't really want to see it close this low. We ultimately, it's the same as what we're looking at with the down candle, right? You want to close, you don't want to close 50% below 50% or above 50%, right? So we don't want to see it close below 44.50. I'd like to see it close, above this 45. 400, so 45.44 sort of level through here and end up, looking a bit more like a pin reversal candle. So it really clearly shows that the bulls have won and, the next candle is probably going to be red as well. And then we sort of roll over and you get some sort of like more of a flag looking type action rather than a potential top, right? That's possibly getting ready to roll over. So that's Ethereum. A couple of other ones. Rose is looking pretty nice. Just called this one out in Discord just before. Back here. So I don't know. I think this is looking pretty good. It's got good fundamental action happening at the moment. They just had a partnership announcement with Facebook and had this huge pump and then pulled back almost the entire way. It's been chopping sideways since then. Looks like a pretty nice symmetrical triangle action at the moment. So this looks like it's ready to break out and probably push pretty hard into the next week. And then Solana is looking really nice after a pretty brutal sell-off as well. Ended up being almost 30% there, so 28.5. And it's looking pretty nice here now. So we've got this key trend line through here that we pushed above, been rejecting from it, rejecting through here. We just got back above that. And but more importantly, I'm just going to remove this so we can see a bit more clearly is the inverse head and shoulders play at the moment, which is always a really nice bullish setup. So let's just get the measured move target for that. Would be about 255. So definitely a bit of room in there. So if we're going to take this trade to trade inverse head and shoulders, you put, if you're getting in at the neckline, or if we're getting in right now and getting in, which as it is at the neckline, we'll be putting our stop loss below the right shoulder here, right? Give it a little bit of space. You know, it's about 7%. It's a decent move, and we're looking for that measured move target, which is 255. It's a pretty nice 2.4 to 1 R, right? That's your risk to reward ratio. So that's pretty much it there, guys. They're the main ones I'm looking at the moment. The daily on Ethereum as well, I didn't really cover that, but it's looking pretty nice after, you know, we came back and bounced off pretty key levels. I was looking for it a bit, I was a little bit too early, 2 days early or a day early, really. I was looking for the bounce off there on that in Bitcoin, but, you know, we went deeper as it always usually does. And bounced off the previous high back here instead, which is still a really nice support resistance flip. And, you know, it's hard to tell exactly what's going to happen here on Ethereum, but this is definitely a change of behavior at the moment. So this could end up just going sideways like this for a while, maybe forming some sort of structure, triangular shape structure, something like that here before the next move up. One thing I am watching though is Bitcoin, the Ethereum Bitcoin chart. It looks to be in a really big bull flag here at the moment. If we start to get a breakout above this key trend line through here, which is getting quite close to, that could really see Ethereum USD start to break out and push quite hard, maybe a little bit earlier than this sideways chop, right? So that's one thing to watch. If this starts getting going, the USD chart's going to go nuts. Could also have one more rollover and then go again. That would look a little bit better in the structure for a flag for the multiple touches. So you have 1, 2, 3, 4, 5, and then go. But sometimes they do go early. So that's the one thing that I got my eye on at the moment, because that'll be a big move that does play out. Because, you know, I mean, this flag's been playing out now for over half a year. 7 months, pretty much 193 days. So those are the main things I'm watching for at the moment. I think it's going to be a really big week coming up. We want to make sure this daily close does have a really nice and strong close here. It's looking pretty good at the moment. So I'd imagine that the bulls seem to be in control of the market at the moment. Key area to watch for is pretty much getting around above this 6,100 and above, which is the last high before the dump, and then above the P block as well. Then we'll be looking for, obviously, for this all-time high level and the areas of resistance we spoke about before, to not get rejected there in some sort of rising wedge type fashion that happened back here and then roll over. So keep our eyes peeled for weakness around this 65, 66 area. You know, either go as low as 64 to 66, I think is the key area to watch out for. If we can get above that, you know, back above this left shoulder here, it's probably off from there, right? So that is the main thing I'm watching for. And if we do get back above there, we'll do an update on the targets we're looking for. Thanks a lot for tuning in, guys, and we'll see you in the next episode.